Good morning, good afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar. Okay, traders, this video is for Wednesday, October 29th, 2008, and I am here to say right here and right now, do not fall in love with the upside. Yes, we had a rally in the S&P today. Big deal. You had one day up. We've been going down for weeks and weeks on end. Serious downward movement. You get a pop, and what happens? Let's think about this pop that we got today on Tuesday for a moment here. Let me see if I can make some sense. The currencies had a rally. The dollar went down, and the indice markets went up. What am I thinking? What's going on here? Oh, that's right. It's the day before an FOMC meeting. Traders, this is going to be an easy one because what we're doing here is we are invoking the two-day rule, traders. The two-day rule. The FOMC meeting ends tomorrow, or I should say today, because this video is being shot Tuesday night for Wednesday. So the FOMC meeting ends on Wednesday at 2:15. That gives us one more chance for rally, which would be day 2 rally in a bear market. The two-day rule works like this. You have a market that's been going down. Suddenly you get a big rally day, then you get one more big rally day, and then you get this. That is the two-day rule. We choose to invoke the two-day rule in currencies. We invoke the two-day rule in Japanese yen, but the other way, where we're looking at the two-day rule in Japanese yen and dollar index, is the opposite. You have rally, 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 big down day, second big down day, you buy it looking for the upside. That would be our two-day rule. Right now, Japanese yen backed off big time from 108 down to 102. The dollar index went down. Those two have been going up for quite some time. The British pound, the Australian dollar, the Canadian dollar, the euro currency, and many other currencies went up today, and they've been going down for a while. So the two-day rule is already taking effect in the currencies. Now, the S&P had a nice fat rally today. First day of FOMC meeting, right? It's a two-day meeting, Tuesday, Wednesday. Tomorrow, you should get more upside, and when the Fed cuts, the downside comes right back. Hence, the two-day rule comes into effect. So we choose to invoke the two-day rule for tomorrow. Traders, I'd like to show you some charts on the board here behind me in a moment. I will illustrate the two-day rule, what it looks like, how to trade it, and what happened around FOMC meetings, the last 3 meetings that we've had. So let's go to some charts right now, traders, and I'll talk to you afterwards. Okay, traders, you are looking at the British pound December daily bar. British pound has been in a bear mode for quite some time. We are invoking the two-day rule now that we are hovering around the FOMC, Federal Open Market Committee, Fed meeting here in the United States. That is the governing board that decides whether interest rates are going up or going down or staying unchanged. We feel interest rates go down. I don't think the governments around the world have a choice. They got to lower interest rates. But let's take a look at analysis for that one, and we'll come back to that. Analysis says sell 2 days major rally in a bear market. The last time we had 2 days up is right here, and look at the end result, trader. We went up, up, and whoosh, big break. Now, here we are. There's an FOMC meeting Tuesday and Wednesday. On Tuesday, what do? We put in the first rally day we've seen in quite some time. This is Tuesday night into Wednesday right now, and this little bar is already up here. Meaning the likelihood is you could get another rally, which would really be nice because it would coincide right with the resistance right there. Look at that. Resistance line touches here, and if we rally one more day, it'll touch right there, and that should be enough for the two-day rule to give you a sale. Now, that's in the British pound, traders, and if it were only in one currency, of course, it's questionable. But let's look at a few more currencies here and look at the two-day rule, and we'll go forward from there. Okay, traders, you are now looking at the Euro currency December daily bar chart. Euro currency. Once again, the two-day rule. If you look back right here, you actually had another one of those two-day rules. You had a rally, you had a second day rally, hit the trend line, and the break began. Now, here we are, that very same trend line, as you can see, exists, that blue line right there. We had a rally day today in Euro currency on Tuesday. Tuesday night into Wednesday, you're up a little bit as it is. If you rally more and hit that trend line and stop, the 2-day rule comes right into effect, and down we should go. Now, if you look inside this blue parallel, we hit it here, we hit it here. We rallied and hit it here, we dropped and hit it here. Now we're rallying. If we hit it here, it would be perfect timing. The 2-day rule, the Fed meeting, Euro's going up for reasons people don't realize. Well, if it goes up a little more and hits that spot, it's staying right within its parallel, and it helps to invoke the 2-day rule. Traders, that's British pound and Euro currency. Let's look at a couple more here. Okay, traders, next up on the block, the 2-day rule, how it takes effect in the Australian dollars. Here we are, the last time we had a 2-day rule, rally day 1, rally day 2, missed the trend line but got close to it, and then the breakdown began. Okay, now here we are today. It is Wednesday. Of course, I'm speaking to you on Tuesday night for Wednesday's video. We had rally day, big rally day on Tuesday. Tuesday night to Wednesday, it's up a little. The trend line resistance is waiting. If you get a nice fat rally into the trend line, the 2-day rule comes into effect. So British pounds, Euro currencies, Australian dollars, I think you're getting to see the point here. You're beginning to see that the 2-day rule, yes, does work and should take effect tomorrow. Now, once again, traders, as I glance back at this chart, I didn't even see this one before. Look at the 2-day rule right there. The market rallies, done, down we go. Another one and another one. You tell me if you think it's going to work tomorrow. Let's look at a few more charts here. Okay, traders, you are now looking at the Japanese yen December daily bar, and it is the 2-day rule, but in reverse. The other currencies that we've watched or just looked at were going down, were bearish. The Japanese yen is bullish, and it's going up. So the 2-day rule would be the one where you get 2 days down and then the turnaround buy, right? That's what you would expect. Well, here we are, major down day on Tuesday. Wednesday or Tuesday night into Wednesday, it's already looking like it may want to go lower. And it looks to me like the 2-day rule, it'll be down for the second day. And then look at this, traders. Support right there. Just like we had the resistance on the other charts. If you hit it, the 2-day rule comes into effect and up we should go. Now that's the currencies. Let's go look at a couple of indice markets and see what they're doing right now around the FOMC meeting and if the 2-day rule applies here as well. Okay, traders, very interesting chart here. S&P 500, the Emini S&P December daily bar. 2-day rule works back here. The market rallies day 1, it rallies day 2, and then begins to crack. And something very interesting took place right at that 2-day rule. There was an FOMC meeting. Go look at the date yourself. Then the market breaks down, and we have a fat 2-day rally. Rally day 1, rally day 2. Then the market breaks down, and an FOMC meeting, an unscheduled meeting happened right there at the same time we had a 2-day rule come into effect. Now here we are, 10/29/08. The FOMC meeting is going right now, and we've had a 1-day rally. What do you think's coming next? I say the 2-day rule and then the drop. FOMC meeting right here, and look at this, for instance. A resistance line comes right across the top of this mess. You can connect the resistance to this 2-day rule, to this one, and hopefully this one tomorrow, and that should be enough to knock us down. Now that is interesting, traders. I don't care what you do for homework. This is a very interesting piece of homework right here. Let's go look at one more chart now. Okay, traders, we are now looking at, for our German fans out there, the German DAX. If you think the 2-day rule only works in the U.S., check this one out. 2-day rule. Rally, the top comes in, we begin to break. FOMC meeting right there. within 2 days of the two-day rally. Next, the market breaks down. What do? We hit the bottom. We have rally, rally, and an unscheduled FOMC meeting. Boom! What happens? The market breaks. Now, here we are. It is the same date, 10/29/08. The Fed's already met today on Tuesday. The meeting ends tomorrow, being Wednesday. We've already had the one-day rally. Likelihood is you get the second-day rally, then the turnaround drop, and the two-day rule comes into effect. That's what I think we're going to get here, traders. I've chosen to invoke the two-day rule, and I think this is going to work out just fine. If you look at your technical indicators, they're all still pointing down in world indices. So the two-day rule hovering around FOMC meetings seems to be the flavor of the chart when we get to an FOMC meeting. And traders, we are at an FOMC meeting right now. Do your own homework, traders. Tell me what you think about this. So, you've seen those charts. Traders, is that interesting or what? Especially that two-day rule around those FOMC meetings? Wow! I find that extremely interesting. So get yourselves ready. Come on down to our site. Traders, if you would like to learn how to do analysis like this and even learn the mentality to think, to go check for FOMC meetings and two-day rallies and other rules that we apply every day, come on down to the Omni Trading Academy. It's www.livewithoscar.com. Grab yourselves a free membership and allow us to teach you how to get this analysis right. Traders, I know times have been really, really tough lately, and if you would like an analyst of my caliber on your team, simply come on down to the site or open a trading account with me, and I will act as your personal broker and trading coach, and I will help you get through these rough and tumble markets, because I know right now you can certainly use someone in your corner who knows how to read these markets. It has been rough and tumble out there. The swings have been phenomenal. I have never seen, in almost 27 years in this industry, I have never seen volatility like this before. And I'm sure neither of you traders. So if you need the help, we are here. Our arms are open to help you. Come on down and allow us to do so. All right, traders, a couple of things I want to talk about. One, you see what's going on here with the two-day rule. It makes no sense to me that out of the clear blue, currencies that have been going down have a rally. The dollar that's been going up comes down. Japanese yen, which has been going gangbusters up, comes down. The indice markets, DAX, FTSE, you name it, around the world that have been going down come up right before a Fed meeting. Come on, this looks like an easy one. So what we need to do, keep our powder dry, let the Fed do what they're going to do, wait about 40 minutes, and then strike. I don't know if you'll have a chance because I'm thinking that there'll be a quick downward spike right after the FOMC, but you never know, which is why I don't want you to just jump right in and be sure this is going to happen, because honestly, traders, no one knows for sure what's coming next. No one knows what's going to happen. Nobody has a crystal ball. But when you look at analysis like I just showed you on the board, it's very likely going to happen again. So what we'll do is we'll sit on the sidelines. We'll sit on our hands like I tell my Omniacs all the time. Let these markets do what they're going to do. When it finally shows us direction, we'll jump in and we'll strike. I will say this once again. Don't fall in love with the upside. You'd be crazy to do that. The Fed is probably going to cut 50 basis points. I'd love to see only 25 to show that they think the market's going to recover, but they're likely going to do 50. The thing about it is, once they do 50, we're down to 1 percentage point, traders. There's no more downside for them to keep cutting. That means dollars have to go up, currencies have to go down, and I am making a prediction about the U.S. dollar right here. I think the U.S. dollar turns into the next carry trade. You know the yen carry trade everybody's been talking about, the unwinding of it recently? I think U.S. dollars are in flavor and they are going to be purchased like crazy, because if you can buy U.S. dollars at a 1% interest rate and you can use that to put to work in other countries with a higher interest rate, it makes perfect sense to buy U.S. dollars and put them to work in other vehicles. And that's why they did it with the Japanese yen when interest rates went down to about 0 or a quarter basis point. The world jumped all over the yen and used it for years. Now that's unwinding. The U.S. has about the best, strongest currency with the cheapest interest rate, which means it's a great dollar to borrow. And that's what I think is going to happen. And I think the U.S. dollar, the dollar index, becomes the next, so to speak, yen carry trade. Now, if we get this right, that should take dollar index all the way up to the 110 area, but that's long term. We're day traders. We expect the 2-day turnaround and flip up in dollars, up in yen, down in currencies, and to flip back down in the world indice markets. Let's see if that's what we get. Remember, try to keep your powder dry. Don't get too nervous. Don't get emotional, and don't trade ahead of a Fed meeting. You will survive in this industry a lot longer if you do two things. Never, ever trade in front of a Fed meeting, and always place your stops and place them first. A stop is your best friend. You know, I haven't done this segment in videos in a while. This is the type of environment that if you are not placing stops first, you are susceptible to a real punch in the head, and this is why that can happen to you. Let's say you're thinking about buying 5 S&P at the market, and you want to put a sell stop in $10 lower. So you type buy 5 S&P, market, hit enter, and bad news comes out and that thing tanks. The second you hit enter, it tanks for $50. You know that can happen, especially in this environment. Well, you had no stop in, you're nailed for big dollars, you're in a position where you're praying to get out, you wish you weren't in it, and what are you going to do? You're going to get tagged. Let's take that same scenario. Now, I want to buy S&P and I'm going to put my stop in $10 lower. First thing I do is I type in my sell stop, sell 2, 3, whatever the number is, sell 2 S&P at 9.12 on a stop. Okay, I put my stop in, then I go to buy my contracts, and before I get a chance to buy them, that same news comes out and the market plummets $50. What happened to me? I got short by accident because I had a sell stop in, and I ended up catching the move because when the disaster takes place, that's when your stops get hit. That's the best case scenario. What's the worst case scenario? You typed in your sell stop, it's in place, then you put your buy order in, it gets hit, the sell stop gets hit immediately, and you're out of the market. You see what I'm talking about here, traders? It is so wise to place your stops first. If you're not going to place them first, at least make sure you place them the moment you get into a position. A stop is your best friend. All right, traders. If you like, give me a call anytime, day or night, 702-629-4755. As always, please keep those emails coming, traders. I've been getting back to every one of you, as you know. A lot of nice charts have been coming in lately, so thank you on those charts. All right, traders, shoot your emails out to Oscar@futuresanalysts.com. All right, I think, you know, for these last 2 weeks, I have not been giving you exact buy and sell recommendations on the board, because there's such tremendous volatility. I don't want to give you numbers on this board and get phone calls and find out people did it wrong or placed their orders wrong. I'm here to help and protect you, traders. So what I've been doing is giving you our direction, which of course we expect the 2-day rally and then the drop. And you come on down to the site and we give you the recommendation, we give you the stop, we tell you the direction, and we walk you through those trades every day. So if you want to know exactly where we're trading, come on down to the site and find out for yourselves. Okay, traders, those on-demand videos are out there. There is a library of classes, fantastic classes, interactive live classes we hold at our site during the week. It is me on camera and microphone live, lending my desktop out to you, so on your computer you can see the charts I am talking about live. You can hear me, you can see me, and I work that so that you learn everything you can about analysis. Those classes then get recorded and archived, and they are in our on-demand library. So go check out Omni On Demand and check out those classes, traders. They will absolutely help you. Last but not least, traders, thank you so much for opening your trading accounts with me. I promise I will be here to help you in every way I can. So continue sending in those accounts, and I will continue helping you to the best of my abilities. Okay, traders, thank you so much. Remember, say this to yourselves every morning, every afternoon, every evening, because it'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.